What is an RRSP? An RRSP, or Registered Retirement Savings Plan, is more than just a savings account. It's your financial superhero designed to make your retirement dreams a reality. Let's dive deeper into what makes it super. Definition and purpose. Definition: an RRSP is a unique savings account crafted by the Canadian government to inspire individuals to save specifically for their retirement. Purpose: its superhero mission is to be your reliable sidekick, helping you build a robust financial safety net for your golden years. Contributions reduce taxable income. When you contribute to your RRSP, it's akin to gifting your future self a financial superpower. The enchantment unfolds during tax season. The money you stow away in your RRSP acts as a shield, lowering your total taxable income. Example: if you earned $50,000 and devoted $5,000 to your RRSP, only $45,000 becomes the taxable superhero battleground. It's a victory for your financial fortress. Tax-sheltered growth until withdrawal. Financial greenhouse for your money. Think of your RRSP as a financial greenhouse. Once your money resides here, it's like planting seeds in rich soil. Your investments can flourish. And the best part? No taxes lurk around to snatch a portion of the growth. Growth without immediate tax bites. Unlike a regular non-registered account where gains and income could be subject to taxes annually, your RRSP shields your investments from such immediate tax bite. It's a safe haven where your money can grow freely. When taxes enter the scene, picture taxes as gatekeepers that only arrive when you decide to withdraw money during retirement. Until then, your investments enjoy the tax-sheltered sanctuary within your RRSP. Suppose you invested $1,000 in a stock within your RRSP and over the years, it grew to $1,500. If this happened in a regular account, taxes might nibble away at the gains each year. But within your RRSP, that entire $500 growth remains intact, working to generate even more earnings. It's a compounding advantage that can significantly boost your savings over time. In a nutshell, think of an RRSP as your personal retirement savings sidekick, fighting the battle against taxes and helping you build a robust financial future. It's all about contributing, reducing your tax burden, and letting your money grow tax-sheltered until you're ready to enjoy the fruits of your disciplined savings in retirement. How does an RRSP work? Open an account and make contributions. To kickstart your journey with an RRSP, you need to open an account. This can be done at various financial institutions such as banks, credit unions, or investment firms. Contributions can be made regularly or as lump sums, providing flexibility in your savings approach. Tax deductions on contributed amount. The real superhero move of an RRSP comes during tax season. The money you contribute to your RRSP is akin to a shield against taxes. When you file your annual tax return, the amount you contributed is subtracted from your total income. This deduction translates to a reduction in the income on which you're taxed, potentially leading to a refund or lower tax bill. Rules regarding eligibility, contribution limits, and carry-forward room. While contributing to an RRSP is a smart move, there are rules to follow. Your eligibility depends on having earned income and filed a tax return. There's an annual contribution limit, typically 18% of your previous year's income, or a predetermined maximum set by the government. Unused contribution room can be carried forward to future years, acting as a financial safety net. Age 71 rule, RRSP evolution, choosing between RRIF and annuity. As you reach the milestone of 71 years, your RRSP enters a new phase. It's time for a retirement makeover, and you have two primary options for this transformation: registered retirement income fund and annuity. What is a RRIF? It is the next chapter in your retirement savings journey, not an end, but a transition from your RRSP. When you convert your RRSP into a RRIF, you're shaping a plan for consistent income during retirement. How does an RRIF work? A registered retirement income fund, RRIF, introduces a unique rhythm to your retirement savings journey. At its core, it is designed to provide a reliable income stream throughout your retirement years. The key to understanding how it works lies in its requirement for regular withdrawals. Unlike other retirement savings vehicles, RRIF demands that you make regular withdrawals, contributing to a consistent income flow. This distinctive feature ensures that you have a steady income stream during your retirement, helping to cover living expenses and maintain your desired lifestyle. It's important to note that the government establishes the minimum withdrawal amounts from a RRIF each year. This minimum provides a degree of flexibility, allowing you to tailor your withdrawals to your financial needs while still adhering to the government's guidelines. This balance between regularity and adaptability is a hallmark of the RRIF structure, providing you with financial security and the freedom to structure your retirement income according to your preferences. Why consider a RRIF? It offers a range of advantages that make it an attractive option for retirees. One notable benefit is the flexibility it provides in structuring your retirement income. While ensuring a steady income stream, it allows you the flexibility to decide how much you want to withdraw annually. This adaptability is particularly valuable as it enables you to tailor your withdrawals to align with your specific financial needs and lifestyle during retirement. Another key aspect that makes it appealing is the control it affords you over your investments within the fund. Unlike some other retirement income options, a RRIF allows you to maintain control over your investment decisions. This control not only provides a sense of ownership but also contributes to the potential growth of your investments within the RRIF. This feature aligns with the goal of ensuring financial security during retirement, while giving individuals the autonomy to manage their funds in a way that suits their preferences and objectives. In summary, a RRIF stands out for its flexibility in withdrawal amounts and adaptability to individual financial circumstances. Coupled with the control it offers over investments, it becomes a versatile tool for retirees seeking a reliable and customizable income stream during their retirement years. How to sign up for a RRIF? Consultation. Start with a consultation with a financial advisor to understand if a RRIF aligns with your retirement goals. Conversion process. The conversion from RRSP to RRIF can be facilitated through your financial institution or with the help of a financial advisor. Selecting investments. Work with your advisor to choose investments within the RRIF that align with your risk tolerance and goals. Minimum withdrawals. Understand the government-set minimum withdrawal requirements, ensuring compliance for steady income. Where to sign up for a RRIF? Financial institution. Most major financial institutions offer RRIF. Approach your existing institution or shop around for competitive rates and terms. Financial advisor. Seek guidance from a financial advisor who can recommend reputable institutions for your RRIF. Online options. Many institutions provide online platforms for managing your RRIF, allowing for convenient access and control. Annuity, a guaranteed stream of income. What is an annuity? An annuity is akin to crafting your own pension plan. It's a financial product designed to provide a predictable and guaranteed stream of income during your retirement years. When you purchase an annuity, you're essentially entering into a contract with an insurance company. In return for a lump sum or a series of payments, the insurance company commits to paying you a fixed amount regularly, either for a set period or, more commonly, for the rest of your life. How does an annuity work? You make a significant payment, the premium, to the insurance company to initiate the annuity contract. This payment can come from your savings or other retirement accounts. The insurance company, in turn, guarantees a steady stream of income to you. This can be monthly, quarterly, annually, or following another agreed-upon schedule. The payments continue for the chosen duration, which could be for a specific number of years or until your passing. Why consider an annuity? Financial stability. Annuities provide financial security by delivering a fixed income, shielding you from market fluctuations. Peace of mind. Knowing that you'll receive regular payments, regardless of economic conditions, brings peace of mind during retirement. Lifetime income. Lifetime annuities ensure a consistent income stream for as long as you live. How to sign up for an annuity? Seek professional guidance. Start by consulting with a financial advisor. They play a crucial role in helping you understand whether an annuity aligns with your unique retirement goals. Your advisor will assess your financial situation, discuss your preferences, and guide you through the annuity landscape. Choose your annuity type. There are different types of annuities, each catering to specific needs. Work with your advisor to select the one that best suits your retirement plan. Options include life annuities, provide payments for the duration of your life. Joint and survivor annuities, extend payments to a surviving spouse or partner. Term certain annuities, guarantee payments for a specified period. Make the premium payment. Once you've decided on the annuity type, it's time to make the initial payment known as the premium. Premiums can be a lump sum or paid in installments, depending on your financial strategy and preferences. Activate your annuity for regular income. With the premium payment complete, your annuity is activated. You'll start receiving regular payments according to the terms outlined in your annuity contract. These payments offer financial stability throughout your retirement. Where to sign up? Annuities are typically offered by insurance companies. Your financial advisor can help you identify reputable providers and guide you through the application process. Additionally, many financial institutions and insurance companies allow you to start the process online or through their local branches. Considerations for your RRSP evolution. Evaluate your financial needs and lifestyle. Assess your financial situation and lifestyle to make an informed choice between ARRIF and an annuity. Consider factors such as risk tolerance, income needs, and long-term financial goals. Control and legacy with RRIF. Opting for ARRIF allows you to maintain control over your investments. It offers the potential to leave a legacy for your beneficiaries, providing an inheritance from your remaining assets. Predictability and heir considerations with annuity. An annuity provides financial predictability by offering a guaranteed stream of income. However, it may not leave assets for heirs, as the focus is on providing a stable income during your lifetime. Age 71 Rule Transition. Recognize that the age 71 rule isn't a farewell to your savings but a transformation. This transition into either a RRIF or an annuity continues to support your retirement goals. Soundtrack of your retirement. The decision between a RRIF and an annuity shapes the financial soundtrack of your retirement years. Choose the option that aligns with your preferences for control, legacy, predictability, and overall financial well-being. Deciding between a RRIF and an annuity is a crucial financial choice. For personalized advice tailored to your unique situation, it's highly recommended to consult with a financial advisor. An experienced advisor can guide you through the decision-making process, helping you understand the implications of each choice and aligning them with your retirement goals. When you're ready to embark on this RRSP evolution journey, a financial advisor becomes a valuable ally, ensuring you step into your retirement with confidence and clarity. So, there you have it, wealthy youngsters. We've unpacked the fundamentals of RRSP in this video. If you found this information valuable, be sure to hit the like button, subscribe for more financial wisdom, and I'll catch you in the next video where we dive even deeper into the world of RRSP. Stay savvy.
If you're ready to start your investment journey, we recommend Wealthsimple. Invest in stocks, crypto, and more all in one app. Low fees, expert management, and crypto options. It's all here. When you sign up, use our referral code for a chance to win between $5 and $3,000. Visit wealthsimple.com to get started.